All right, let's pull back the curtain on some of the most predictable, yet somehow overlooked events in the stock market. We're talking about moves you can literally see coming if you just know where to look.
I mean, think about it for a second. What if I told you that not all of those wild market swings are just random reactions to the news? That some of the biggest, most impactful price moves are actually scheduled events, announced to everyone weeks or even months in advance?
Well, it's true. And the key to unlocking these moves lies in two simple words: corporate actions. These are the planned events that create incredibly powerful and, yes, predictable patterns for traders who know what's going on.
Okay, so let's build a solid foundation here. What exactly are we talking about when we say corporate action?
At its core, it's really any event that a public company kicks off that directly changes its stock and, of course, affects everyone who owns a piece of it, the shareholders. Think of it like a big corporate decision that sends ripples right through its stock price.
And that's why I love this slide. That metaphor is just perfect. Imagine a stone tossed into a pond. A company makes a big decision, and that creates ripples. We're talking price moves, huge spikes in trading volume, and it's inside those ripples where all the opportunities are hiding.
So with that foundation set, let's get practical. Now, there are a bunch of different corporate actions, but we're going to zero in on 4 of the most common and, frankly, most impactful ones you'll see.
First up, the classic stock split. A company takes one really expensive share, say $800, and splits it into multiple cheaper ones, like 4 shares at $200 each. Now, your total investment value is exactly the same, right? But it's not just math, it's psychology. A lower price per share just feels more accessible, and that often brings in a whole new wave of retail investors, which can seriously fuel a rally.
Next, you've got dividends. This is just a straight-up reward to shareholders, a piece of the profit. But here's the part you have to watch: the ex-dividend date. Think of it like a cutoff. If you own the stock the day before this date, you get the dividend. Because of that, on the morning of the ex-date, the stock price will automatically drop by about the dividend amount. It's a totally predictable adjustment that smart traders keep a close eye on.
Then you have mergers and acquisitions, or M&A. Man, this is a fascinating dance to watch. The company that's getting bought, the target, its stock price almost always climbs up toward that deal price. Meanwhile, the company doing the buying, their stock might actually dip for a bit because of the massive cost and all the new uncertainty. You've got two very different but very predictable things happening at once.
And finally, there's the spinoff. This is where a company takes a whole division of its business and basically sets it free to become its own separate company on the stock market. Remember when eBay spun off PayPal? Suddenly, the market had to figure out how to price 2 completely different companies instead of just one. That process creates a ton of volatility and, you guessed it, opportunity, as investors figure out what each piece is really worth.
Okay, so we know what they are, but now let's dig into the data and see why this stuff really matters for anyone who's actually watching the markets. Just look at this number. We are not talking about small wiggles on a chart here. On the day a big corporate action gets announced, it's pretty common to see a big, immediate price jump of 2, 3, even 5%. That's a huge move for a single day.
And it's not just the price that moves, it's the activity. This chart says it all. You see this massive spike in trading volume? So what does that mean for you as a trader? It means liquidity. It means it's way easier to get in and out of your position without your order getting slipped, simply because so many more people are trading the stock.
So let's put all the pieces together. You get predictable price moves on specific dates, you get a huge spike in volume, which means great liquidity, and you get a big increase in volatility. Now that last point, that's like a giant green light for options traders, because higher volatility can mean bigger premiums and totally new ways to build a strategy.
And listen, the opportunity here isn't just a single-day event. It actually unfolds in phases. First, you have the announcement. That's the initial shockwave. Then, there's usually this approval period, which creates some uncertainty. And finally, you have the execution date, which brings the final price adjustments. Every single one of these phases has its own unique set of opportunities.
All right, this brings us to the part you've probably been waiting for. How can someone actually trade these events? Let's break down 4 core strategies.
Okay, first, you can trade the announcement itself, right? Trying to catch that first big pop. Second, there's the ex-dividend play. Third is something called merger arbitrage. This is where you profit from the small, but pretty reliable, gap between the target stock price and the final acquisition price. It's basically a bet that the deal goes through. And fourth, for the more advanced folks, you can use options to play that guaranteed spike in volatility. But let me be perfectly clear about this. None of these strategies are a free lunch. They all demand that you do your homework. You have to know the calendars, you have to read the company filings, and you absolutely have to understand the fundamentals of the business. This isn't about getting lucky, it's about being informed.
And that really brings us to the core idea of this whole explainer, doesn't it? These massive market-moving events are hiding in plain sight. They're scheduled, they're announced, and they have predictable effects. And while most investors might just ignore them, they represent a really fascinating corner of the market for anyone who's willing to pay attention.
So I'll just leave you with this question to chew on. Now that you can see the patterns behind these planned market moves, what scheduled event are you going to be watching for next on the calendar? Thanks for joining me.